If you ask me as an Indian investor, what is a good news for the coming financial year, I would say it is specialized investment fund. So we all are waiting for that moment when we can actually invest into something of advanced investing strategies, right? And I mean, what we all have is like you either buy equities or you buy either mutual funds, or if you have a lot of money, you can actually go to a PMS scheme, or even if you have even more money, you can actually go to something called a AF kind of a fund. But specialized investment fund lies in between, something like a mutual fund and that of a PMS. So it starts at a minimum of 10 lakh of investment with advanced strategies like short positions, the use of derivatives up to 25% of the AUM. So let's look into what SIF brings you on table.
So let's look into specialized investment funds. So we should see where it is positioned. So as we already discussed, it's positioned between mutual fund and a PMS scheme. So a PMS would require a 50 lakhs of investment at least. A mutual fund would require something like a minimum of 500 rupees per month. And an AIF, alternative investment fund, would require at least a 1 CR of an investment. So SIF is actually bridging the gap between a mutual fund and a PMS, where it requires around a 10 lakhs of investments at a minimum. And when we say 10 lakhs, it can be into different SIFs. Like into one scheme, you are investing 4 lakhs, into another scheme, you're investing 4 lakhs again, and into a third scheme, you're investing 2 lakhs. Then also you are qualified to invest in SIF. So this gives the flexibility to investors, right? Yeah. Now, again, looking into who all are qualified to offer this scheme. So let's assume after April, like slowly after April, few of the asset management companies are looking into offering SIFs. So suppose like let's assume HDFC's AMC is actually looking to offer SIF. Then let's see who or like HDFC can offer this SIF to investors. So there are like proper criteria given by SEBI. So average AUM should be at least 10,000 crore for at least 3 years. That's the first criteria. And if you don't meet that criteria, an alternate route, which is the second criteria, is CIO, who should have at least 10 years of experience in managing an AUM of 5,000 crore, and a fund manager who has at least 3 years of experience in managing a 500 crore. Both these two conditions should be met. So what I'm trying to say is an SIF should have very much qualified people within AMC to offer this to a investor, which is actually a good thing for investors, right? And what are the benefits of SIF? So benefits are different, right? It gives portfolio flexibility. So if you look at mutual fund, these are very strict and very regulated kind of investment vehicles, where SIF still carries that kind of a regulation and that kind of a compliance, but it gives more flexibility in the form of like how much concentration you can have, how much derivatives positions you can take, how much long short you can go. So it gives more flexibility, and it gives more flexibility for the people who are ready to take little more risk and kind of diversify the risk as well, right? If you can go for long and short, at times it can actually diversify the risk. The second point is having naked short position. Obviously, that's what I explained already. So it can have something like a 130 to 30 kind of a long short portfolio, something of that sort. Now, coming is maintaining the regulatory requirement. So this applies to mutual fund, SIF, everything. So this is in favor of the investors. Like it should maintain the regulatory requirements, and hence it will be safe to invest, right? It is not like it is not gated by any principles. It's nobody's looking into it, nothing of that sort. And this in a way ensure the protection to investors. Now let's look into use of derivatives. So current condition is an AMC can invest into the derivatives up to 25% of the corpus, which gives that flexibility, right? And those derivatives need not to be the just hedging derivatives, it could be speculative derivatives. Now let's look into some of the cons with respect to SIF. So it's already mentioned by SEBI, it will have limited withdrawals. I mean, usually a lot of mutual funds, open-ended mutual funds will have daily withdrawal and daily investment, right? But in kind of SIF, this withdrawal will not be daily. It could be weekly, it could be monthly, it could be biannually or annual. So this has to be specified by the SIF itself. So you cannot redeem your units on a daily basis. So it requires more planning. The way why it is structured so is like if people are like withdrawing it on a daily basis, it can actually impact the returns of the SIF very badly, right? So that's the reason why there is a limitation with respect to withdrawal. Yeah, now we can look into various kinds of SIFs, whatever SEBI has prescribed as of now. So there will be three categories, major categories. One is from equity, one is from debt, and one is obviously from hybrid, a mix of both. So equity will have an equity long short, an equity X top 100 long short fund, a sector rotation long short fund. Hybrid will have a hybrid long short fund, sectoral hybrid long short fund. Debt will have a debt long short fund and sectoral debt long short fund. So I mean, one thing is very clear in this word long short fund is very common here. So let me try to explain what would be a long short fund would be like. So let me try to explain what is a long short portfolio by taking the simplest example of 130-30 long short fund. 130-30 long short fund means 130 of long and 30 of short. So how does this play? Like, let me explain like this. So you have say 100 CR to invest. So when there is 100 CR to invest, ideal case you cannot go for longs more than 100 CR, right? So what a typical long short investor would do is in 130-30 long short strategy, that investor would buy almost 130 CR of long equity of long stocks. Basically you are putting into different portfolios of stock your 130 crores, but you have only 100 CR with you. So how do you get that extra 30? This is by shorting the stocks. So how do you short the stock? You will actually take stocks for loan. Basically you will borrow these stocks from brokers and you will pay a borrow fee, and these stocks you sell it. So you get almost a 30 CR of proceeds, and this 30 CR combining with your already existing capital of 100 CR, you make a 130 CR and then you invest into stocks. So you are actually having a long of 130 CR and a short position of 30 CR. Now some people would have question like, okay, like you are borrowing and then selling, then now what happens? So how do you actually go for long? So you're going for long when you think those stocks are going to give you a better return. I mean, those stocks are going to appreciate in value in the time horizon that they think, and you actually go short on the stocks where you think those stocks are not going to perform good, those stocks are going to decline. And once suppose your strategy actually like worked, and say today you kind of invested in such as stocks where few stocks will go up, few stocks will go down. So whatever the funds you borrowed and invested in the stocks which actually going down, and since you sold those stocks initially, like say these stocks were at 100 rupees and it went to 80 rupees. So you sold those stocks when it was 100 rupees and you bought back those stocks at 80 rupees. So you are again getting a 20 of return, right? So that's how this long short fund actually plays the game. Yeah, that comes to the end of the presentation, and thank you everybody.